Good evening, everybody. Hope everybody's having a nice winter evening. All right, we've got the great pleasure of having Bennett McDowell back with us. He's the founder of Traders Coach, and his background has basically been that he not only has advised high asset individuals, but he's written a software program that's utilized by quite a few of the hedge funds around the world. So this is going to be an opportunity to see how somebody else's technique works very successfully. So with that, Bennett, welcome to the Candlestick Forum. We're anxious to see what information you've got for us tonight.
Thank you, Steve. It's great to be here. Let me just make sure everybody can hear me okay. And while they're doing that, I had to chuckle a little bit, Steve, when you said a cold winter's night. I'll tell you, we're in San Diego in Southern California. And while it does get chilly this time of year, we have had actually a heat wave over the last few days, and it was close to 80 degrees and sunny today. So we hear all these stories about how bad it is in North Carolina, and it just seems surreal. So those of you that are getting affected by the storm, of course, I hope you are safe and okay, and everybody will be good. I guess spring is around the corner, so that's a good thing to look forward to. So I'm delighted to be here, and I thank you so much, Steve, for having me, you and your team. You're a delight to work with. And tonight we're going to talk about trading is the perfect business. We're going to show how to improve profits in your trading business. We're going to show why technical analysis enables you to create a consistent revenue stream. And also, of course, we're going to talk about business plans and what the best business plan approach is. We're going to also discuss, sometimes we need support. So we're going to talk about where to go to support. And then finally, also, we're going to wrap it up with some trading tools and talk about how to find markets and then exploit those markets. So we're going to be with you for about an hour, and I'm delighted to be here. And if anybody loses audio, just let us know in the text area, and we'll take it up at that point. So as Steve said, he already introduced me. I'm founder and creator of the ART trading system here at traderscoach.com. We got a lot of cool free stuff at our website, so please feel free to drop by at any time. And also, too, I can't do one of these webinars without talking about the risks involved in trading. And as you know, there are risks involved in trading, but, without that risk, of course, there is no opportunity. All right, so I'm hearing a little bit of audio issues here. Okay, let's see what we got cooking here. Jim just posted a message. Okay, is audio okay? They're saying no picture, though. Can you see the picture? Okay, audio's fine here. Cutting in and out. Video is fine. All right, I'm going to keep going. I think primarily it looks pretty good. It may be affecting you depending on the internet where you are. So I'll just go ahead. All right, so one of the things we like to do before I do a webinar is we always like to do a sweepstakes, and tonight's going to be no different. I'm going to put a link up there for the actual sweepstakes entry. So I just put that up there, and go ahead and click on that. You have to, of course, enter the sweepstakes to win it, and I'm going to tell you what we're going to be actually giving away today. We're going to be talking about a lot of trading tools that we offer here at traderscoach.com. And for the sweepstakes, we're going to give you a package of all our software tools. And these software tools are going to run for 1 full year, so you'll have a year's worth of software for absolutely free if you're the winner of the sweepstakes tonight. Now, there's one catch. When we announce the winner tonight, you have to, of course, be present. So please be present when we call you out. If not, we'll have to move on and come back to somebody else. All right, those people that are out there having either some audio issues or video issues, I guess the thing to do is log out and log in. And people aren't seeing the link. I just posted it up there. I'll post it up there again, and we'll make sure everybody has a chance to get there. Okay, Becky posted it too. Super. Okay, so let's just give everybody a couple minutes there. Try to get this entry in before the end. We're gonna announce the winner about 10 minutes, I'd say, prior to the end of the webinar. So you need to get it in within the next half an hour, okay? And it's a pretty easy form to fill out. All right, so now we've talked about trading being the perfect business. Let's get on to how to make it the perfect business. All right, first of all, One of the reasons why I was drawn to trading personally, and I had been earlier involved in a lot of other arenas from real estate and so forth, and one of the things I liked about trading is it's really recession-proof. And by that I mean no matter what the economy is doing, whether it's a good economy or a poor economy, there's going to be opportunities in the markets each and every day. You may be able to be in a situation where you can go long if it's a good economy or a good trend, and of course go short when the economy is not doing well. So that ability to make money in good and bad times makes trading a very, very unique profession. If you compare that, for example, to real estate investments, usually with real estate investments, when the markets are not doing well in the real estate area, it's very difficult to unload your property, sell them, and make a profit. All right? A lot of times you'll buy on spec, and then the market will get sour, and you'll be stuck with all these properties, and then you're either forced to rent them or just sell them at a loss. And it's a very difficult business. Trading's not like that. Okay? We can go in and out of the markets on these liquid markets daily and whenever we want to. So they're really quite good that way. You're also your own boss, and you can work from home. With the technology today, you can work from anywhere really in the world. And you don't have to worry about employees unless you want to hire one. All right? And you have unlimited profit potential. You can generate revenue, as I said, in both bull and bear markets, and you're not dependent on your local or really your world economies. And specifically, if you had a retail business, you might be really reliant on your local economy. So really a great business, and it's one that once you learn how to do it and use the right tools, it really can be very, very rewarding. But what does it take to succeed? Well, first of all, trading is not easy. Okay, you have to understand it's going to be a lot of work, and it takes time. Anything worthwhile does take time. So if you think you're just going to buy a piece of software or do something real quick, not so quick, okay? It takes a little time to understand how to use your tools. All right, you need risk capital, all right? So you need to have adequate financing. You need to be able to take care of yourself and your family in addition to having some money left over to actually play the markets with. You have to test your trading approach. All right, a lot of people will just jump into the market without properly testing it and refining it. And of course, then they have problems. You have to start your business, whether it's trading or anything, for the right reasons. You need your heart in it. You really need to love this business. If you're in it primarily just for the money, all right, then the question will be when times get tough or you have a little bit of a streak where you're having some losses, you want to make sure that you love this business enough so that you don't quit. You have to be a problem solver, okay? You have to, if you have a trading approach and it was working and it's not working, you have to find out what market cycle is giving it a hard time and find out how to fix that. And basically after that, then you will have developed an approach where you can be consistently profitable, which is what this is all about. It's not about making money on one type of market cycle and yet lose it on another type. All right, you have to know what works best and when. Sometimes if you're profitable on one market cycle and you know it doesn't work on a different type, then stay out of that different type or work on refining your system until it can make money on the other market cycle. All right, this is a great slide. It's a jungle out there, and failure is not an option. You know, being in San Diego, I have a lot of friends that are Navy SEALs out here, and this is one of their most famous mottos. Failure is not an option. All right, you have to go in with that mindset, because if you don't, then you leave an opening up to escape, and you don't want to do that. All right, so failure is not an option. You are up against the best in the business. You are entering the major leagues. You must be prepared. Anytime you enter a market to make money, all right, you are entering a professional arena. It's not like tennis where you can get paired up with somebody equal on your level. You're getting thrown into the jungle, into the market. And so you are going to be paired against the good traders, the mediocre traders, and maybe ones that are not so good. So you have to have your game evolved before jumping in. And of course, this is a great line. Don't bring a knife to a gunfight. Have the best tools, all right? You don't want to put yourself at a disadvantage. In trading and life, it's the survival of the fittest. So you got to make sure you're prepared to win, and you've got to also make sure you have a system that you have tested. I don't care if you want to back test it or you paper tested it, but it's got to be one that you have been consistently profitable in your testing. So when you bring it over to the live markets, all right, you have a chance to win. By the way, if you don't win in the live markets on a system that you tested previously, then chances are your psychology is getting in the way, and it's making you not trade the system in the same way, okay? So now that we know that failure is not an option, all right, the next great motto is it pays to be a winner, and literally underscore pay. You will get paid to be a winner in the market. One thing nice about the markets, it really doesn't care, all right, what your background is. All you have to be is right, and that's how you get paid. All right, so, and the other thing, too, is as a trader, you are an entrepreneur, okay? You're going out there and you're making money yourself. You're not relying on other people to make it for you. And so right away, that puts you in a very unique group. All right, so your first goal should be as a trader, okay, is if you don't have a system that consistently generates revenue, you'll be out of business. So developing this system falls under research and development. This is goal number one. You've got to have a set of trading rules or an approach or a set of software tools that you know how to use and have integrated into your trading plan in order to be profitable. So that's step one. All right, because it's all about consistent revenue. Okay, consistency is what is so important here. You know, and it's very common, and I did it when I first started trading. You know, when you start out trading, all right, and you get into a profitable trade, sometimes that can give you as much anxiety and stress as a losing trade because you want to what? Take your profits right away, don't you? And what you want to be careful about is getting out of a perfectly good trend too early. So when you find yourself with anxiety increasing, that's actually getting you a step closer to what we call emotional trading. And that's not the game plan. You don't want to be doing that. So instead of trading your last trade, you want to rely on a set of rules that you know you're not going to win all the time, but over time you will win. It's kind of like a casino. Pretend you own a casino. You know, the casino knows it's going to lose a certain number of hands, but the more hands it plays, the more games it plays, it knows that it's got the edge and will make the money. And that's the kind of attitude, okay, that you want to have, okay? All right, expenses. This is kind of an interesting topic because, you know, it's one that I think is very easy to lose sight of, but so very important, not only in trading but in any business. All right, control your expenses. Know where your money goes, okay? You've got to know where your money's going at all times. And to succeed, you need a plan, a business plan, okay? Now, I've written a book called The Survival Guide for Traders. You can get it at any bookstore or Amazon. And in this book, I give you a great business plan that I've made specifically for traders. If you buy the book also, we give you a link in the book where you can actually go to our website, become a member, and download a free PDF file with the business plan in it that you can print and use right away. But the business plan's important, the strategy, operation, financials, all this kind of stuff is in this book, Survival Guide for Traders, and it will really orient you to running your trading as a real business. All right, your strategy as a trader should take into account quite a bit of structure, but not too much structure that it stifles you. So when we talk about structure, you need to have structure in certain areas and yet flexibility to move quickly. So I've divided what I call this trading pie into 4 equal slices. And slice number 1, I call uncovering trading opportunities. And you have to be able to find either the stocks, the Forex markets, the futures, whatever you trade, all right, you have to get into the right markets. And those are the markets, of course, that are what? In play. And how you find these markets can be a very unique process that you may want to uncover. We use something called the ART scanner, where we look for bracketed markets. And Steve, I think you call those type of markets where they're forming at the bottom a fry pan handle, so to speak. Those are tremendous if you did it well. It's amazing the opportunity you can get out of that, okay? Number two, entries and exits. Once you find the market, then you still need to know when's the best time to get in and where is the exits going to be in your trailing stops. So for this, we use something called the ART trading software. ART stands for Applied Reality Trading. I'm going to go over the software a little bit, but back to that sweepstakes that you can enter. All right, this is the kind of software you have a chance to win, okay? Money management, too. The trade size calculator is a great device for calculating your maximum trade size on each and every trade. And we cover money management in great detail. And then finally, psychology, which is the glue that holds all this together. It's the oomph behind staying with the trend or adhering to your stops. You've got to have that inner strength not to get persuaded to do things that you shouldn't be doing in relation to your trading rules. The market can be very seductive. So there are probably a lot more slices in this, but these are the four major ones that I think you need to focus on. And the interesting thing about these slices is that you can't just eat one slice. All right? You can't be on a diet for this. You got to eat the whole pizza. You got to be a master of every slice, so to speak. Okay? You can't just master one slice. You've got to master all four to be successful in this business, okay? All right, I want to move on a little bit to tools, trading tools, having the right tools, all right? And this is a great slide because it really emphasizes that you can do it the hard way or the smart way. And the guy in the boat, he could be rowing or he could be using a big propeller. It's up to you, all right? Obviously, you want to do it the smart way. Now, trading tools can be using candlesticks, like Steve emphasizes, all right? The T-line, we have a lot of folks using those in conjunction with our tools, all right? So the idea is you've got to find what's good for you to make this work. All right, good trading tools enable you to find the best trading markets. We talked about scanning for brackets. We talked about scanning for those fry pan handles. We also talked about the ART software delivering entries, exits, and we use Fibonacci extensions and retracements for price target zones. We use risk control. We control our trade risk very, very carefully on each and every trade. So all your tools that you use have to have at least these three important elements in them. The other good goal to have, and once you get really good at this and get good at using your tools, for example, we use roughly 7 tools listed here on this slide. All right? I have used them for so long that they are absolutely ingrained in my psyche. And so when I can look at a chart, my mind is automatically processing as I look at the tools on the chart, whether I should be buying, selling, or holding this market, and I can literally analyze a chart in 20 seconds. Now, if I get to a chart and I have to scratch my head 2 or 3 times, and I can't find what to do in 20 seconds, then I know it's time to move on to another market. Don't even waste your time there because it's in a complex correction. All right? So when you have trading tools, you need to learn how to connect them, okay? Make them one. And so they basically think of each tool giving you some input, and then when you take all 7 tools, you're taking the collective of that input to derive at a buy, sell, or hold situation. All right, now here's just a slide on our tools at work on a chart. Okay, and this is Tesla. And notice that, you had your fry pan handle over on the left-hand side of the chart. Okay, and then it moved up quite a bit. So if we come down here, we had a fry pan here. All right, then the market began to move up. We have a bunch of these indicators at the bottom. This is what we call the optimum wave locator, or OWL. That helps us decide when to go long and when to go short as well. It confirms these pyramid triangles that the ART systems put on your chart for entries. Notice we had a really nice entry off to the left when it broke this fry pan handle, and then we just trail our stops up until we're finally stopped out like it did on this correction to the downside. All right, now this chart was taken a while ago. In Elliott wave terms, this would have been a 3, 4, it's going to make another high, 5, and I think it's close to doing it now. Notice this middle indicator here. This is another one of our tools called the Precision Trend Filter, or PTF. Notice that this tool is green and has been. That means more highs are coming. Believe it or not, that Precision Trend Filter at the bottom, that indicator in the middle, has a 75% accuracy rate. And in the markets, that's pretty good, okay? So if it's green, there's a 75% chance markets are going to go higher than the highest high of the price bar in that green area. So that would have been the top of what we call an Elliott wave 3. Notice the trend line master here was green during this trend up, is now rolled over to red as it goes into wave 4. So the purpose of this chart is just to give you an idea of what the tools that we use and what they look like on a chart, okay? Now, when you take the trial, okay, or you win our sweepstakes, so to speak, we give you all the information, okay, instructions on how to use this. So if you don't totally understand it by just looking at it, which I can certainly understand, we're going to teach you that, okay? So don't worry about it. All right, now, I want to go a little bit further into some of the signals that you saw in that chart, and I briefly want to go over one of our entry routines, and this is a bullish entry off what we call a pyramid trading point. Now notice the apex is at the top or point of the pyramid trading point triangle. Now that triangle is drawn on a 1, 2, 3 price pattern. All right, the first leg up goes to the top of the apex where resistance is. The second leg pulls back and forms the base leg. And then the third leg goes up, and if it goes up over the apex, that's our entry. Why do we like 1, 2, 3 patterns? Very simply, they equal the definition of a trend. Higher highs and higher lows. Now, the art system, when it draws pyramids, does one more thing. It's actually calculating the momentum on each of the moves, whether it's the leg to the left, the leg to this down to the second, and the third part of that 1, 2, 3 pattern. It's looking at the momentum because not all 1, 2, 3 patterns will have a pyramid on them because the momentum is not high enough to make it a high probability entry. And of course, the base leg, which represents support here, will be where our initial stop is. As new pyramids form, we will go ahead and move the stop up. Here's an example of a downtrending market with a bearish pyramid indicating a sell or a short if you're in the stock market. Same theory, it's just upside down, reversed. All right, if you want to learn more about this, I also have a book called The Art of Trading on this that explains these signals. So that's available as well at major bookstores and Amazon. All right, I want to talk also about one of our other tools that we use, and that's called the Elliott wave. And the Elliott wave we've been using for quite some time, and basically, in its simple terms, in a trend, there are 5 waves. This slide in front of you here shows an uptrending market with those 5 waves. Notice waves 1, 3, and 5 are green in color, and those all are called impulsive waves in the trend up. So they all move in the same direction as the trend. They are interrupted by waves 2 and 4, all right, which are small retracements in the ongoing trend. Wave 4, okay, is usually a more complex wave than wave 2. However, if wave 2 is complex, then wave 4 will be a little bit simpler. All right, so you also have in downtrending markets, the same theory applies in terms of Elliott wave for a downtrend. 5 waves in a trend, whether it's bullish or bearish. Here is an example showing that here's our trend up on the left-hand side. All right, notice a 1, 2, 3, 4, 5, just like the other chart we were looking at. But notice that there is a light blue little waves inside the larger waves. And this is called fractal symmetry, inside the Elliott wave, so there are waves inside of waves. So they don't always look nice and neat like they do on a chart made from theory. Notice that also on the right-hand side, we have an ABC correction zoomed in on. And notice that A is made up of 5 waves, B is usually an ABC correction, and C is 5 waves as well. So if you put 1, 2, 3, 4, 5 under a microscope, it'll look something like that. Now here it was on Apple stock. Okay, here's what the Elliott wave pattern looked in reality. All right, now the wave 5 is the September high before the sell-off. Okay, this did not catch us by surprise. And if you had been tuning in to my market briefs at TradeStation, we were kind of right on top of this. And wave 5, of course, on the far right-hand side of your chart, hit beautifully a Fibonacci target zone and then began selling off and taking out key levels of support. But notice here you have 1, you have a major 1 here, a 2, a 3, a 4, and a 5. And notice here you had 1, 2, 3, 4, 5 waves in 1, ABC 2, 1, 2, 3, 4, 5, and 3, ABC 1, 2, 3, 4, 5. Okay, so that's kind of the structure in real markets, how they look. They're not so nice and neat like in the books. They look more like that. But once you get good at it, okay, you can figure that out. Now, I have a book coming out, okay, it hasn't been released yet. It should be released sometime later this year on Elliott Wave Technique Simplified. And in this book, I basically show you, okay, how to count Elliott waves. So this is available for pre-order at Amazon at any time. All right, we have a tool, however, to help us verify Elliott wave counts. So there's times when if we need a little help to determine whether we're at the top or in a correction or a change in trend, the owl comes to the rescue. And what the owl does, it will have the highest histogram on wave 3. And then if that corresponds to what looks proper on the chart in terms of price activity, then that confirms wave 3. Wave 4 will always have a negative oscillator. Wave 5, when it appears, will always have bearish divergence, like this. So in this case here, this was a wave 3 as indicated by the owl. It usually puts a pink dot on the TradeStation platforms, or it puts a wave 3 if you're using NinjaTrader, for example, or eSignal. All right. MetaTrader 4, it will put a pink dot as well, multi-charts as well. All right, so then you have an ABC correction and then a new wave 5 high over here. But notice the owl wasn't as high as it was on wave 3 classic bearish divergence. This is not an MACD indicator, by the way. This is something very unique. All right, we also have this indicator called the PTF. You saw me talk about this a little earlier, where I was talking about having it a 75% accuracy rate. And it's very easy to use. When prices create a green segment in this indicator, and the indicator remains green, we have higher highs. When it turns yellow, it means the higher high had been met, but it is now neutral, so it is not generating a higher high signal anymore. Doesn't mean it can't pull back and generate another one like it did in this chart, but it gives you a nice synopsis where you get near a top. If you think you're near a top, you may want to scale out or pull back, and you have a green PTF, that can be a good enough reason to stay with that trend and make your stop a little more liberal. Here's Apple again on its sell-off with the Fibonacci's drawn in. All right, here was a wave 4 retracement coming right down between 38.2 and 61.8. And then a high getting above the 61.8 to 100, wave 5 high, and then now moving back down, and this was taken a while ago when we were in a wave 3 to the downside. Notice the red PTF, and we did go lower. Okay? And now once we went a little bit lower, notice we had bullish divergence. We had a price target zone between 520 and roughly 580 or so. Up to the next point where we're expecting a reversal, and we got that as well. Here's Ford Motor Company reaching into its price target zone before expecting a pullback. Here's Starbucks, okay? Starbucks, this entire move here was a wave 3, okay? Entire move, okay? These trend lines are drawn by our trend line master, which automatically draws short-term and long-term trend lines. And notice this pink dot is here. We did not have a negative owl after the pink dot, so wave 4 did not technically start until the owl went negative. So we can expect more highs after this based off the fact that it's just a wave 4. And here's the chart we've shown you already on Tesla, okay? And that was in a wave 4 at that time too. All right, the ART scanner is another tool that we have. And the ART scanner leads us to markets where we can apply our ART trading software tools. And notice here we had a consolidation that lasted quite a long time, all right? And we know, and Steve, I know you know this too, that big trends come out of markets that have been consolidated for a while. They're even better if they're a fry pan handle, right? Okay, so once they pop out of there, then you want to start taking the trades. While markets are inside a channel, it's best to stay away. Don't trade until they break out. So what you can do on your charting platform is when you see a channel that's in progress, you stay out of the market, and yet at the same time put an alarm in so when it breaks the upper band of the channel, you know to go long. If it breaks the lower band, then you might want to consider a short position. You can also use Elliott wave to gauge the probabilities on which way it should break. Here's another one. I mean, I could show you tons of these, and Steve, I know you have a ton of them too, where they just channel and then break out. But the idea is you don't want to take any of these pyramids inside here. You may get lucky and get a good one like this one, but you want to wait until it breaks outside the channel. That point or apex of the pyramid needs to be above the channel in order for you to consider taking that. Then you can take it, and then you trail your stops up, of course, by these new pyramids. You just move them right up under there like that. And then you exit the market when the actual pyramid bottom is taken out. Here it is on the S&P E-mini, okay, on a short-term time frame. And this is a combination of using Elliott wave. This was an intraday time frame. And so here we have a 3, 4, and a 5 developing with a red-colored PTF. So chances are wave 5 down is not over yet, right? 75% probability we're still going lower. But we're in the target zone. So we're getting ready. Once we get down in here, we'll wait for that owl to go bullish again and then look for some bullish trades. Now this is where the market, once it gets down to these bottoms, can go into those fry pan handles for a while and then break out. So you don't want to go long too soon, okay? Wait for the market to prove itself a little bit before going long. Let it bottom, let it do what it needs to do, and then as it starts to move up, it'll start taking out some key levels of support that had formed on that leg down, okay? Apple again, okay, starting to bounce along the bottom. We were starting to see bullish divergence here, and then we got the pop. All right, risk control, another tool we need to discuss, okay? Risk control. What we do with risk control is we use a device called the trade size calculator. Now, what the trade size calculator does is it calculates your maximum, I repeat, your maximum trade size, which is also the same thing as your position size, based off your entry and your exit and your account size and the amount of risk you want to take on the trade. You ever hear the rule of thumb, you should not trade risk more than 2% on any given trade? Okay? The reason for that is basically that if you're winning 60% of the time and your payoff ratio is 2 to 1, but 2% risk makes sense. All right? So if you have a decent trading system, that's good. If you don't have one that good, it should be a little bit lower. And on the trade size calculator, you'd put your percent risk right in here, you see? And then you put your account size in here. Now, when you put 2% risk, what that does not mean, for example, 2% of 50,000 is, of course, $1,000. It does not mean you're buying just $1,000 worth of stock. Okay, you could do it that way if you want, but that's not what that means. All right, what it means is that you are buying enough shares that if you get stopped out, you're not going to lose any more than $1,000. So while the percent risk for the calculator can stay at 2%, your actual shares are what's going to change, or contracts if you're doing futures, or pips. We have a calculator for Forex too. So that's what's going to change. So the constant is the risk, and the variable that changes is the shares or contracts. This way, you're keeping your losses at 2% of your account size, which is in this example is $1,000. Now, if this kind of stuff interests you, which I hope it does because risk control is so important, all right, you want to get the Trader's Money Management book that I wrote. Okay, in this we talk about all aspects of risk control. Now, we are calculating something called trade risk here. Okay, there's another type of risk. It's called market risk. Now, what's market risk? Market risk occurs when you have a carefully chosen stop and you have something happens in the market that the market gaps past your very carefully chosen stop. That's market risk. How can you defend yourself against market risk? The trade size calculator will take care of trade risk, but how can you defend yourself against market risk? Anybody? Stops. Puts okay. You could do that through that. Puts or calls. Again, stops aren't going to be just the answer because we're talking about a market risk event that could gap past your carefully chosen stop. Okay? Market risk, all right, the only way to control that is by funding your trading account with risk capital. And then watching your trade size, monitoring your trade size very carefully. Because the chances are if you have a market risk event where your loss is a little higher than you expected, it won't be a bust situation, it'll be a setback. If you're not using the trade size calculator and carefully controlling your trade risk, then it could become a more serious situation. But from what I've seen, even pretty severe market risk events have related themselves just to a minor setback. Okay? So that's worth. Now all these tools you can use on any time frame. All right, they're trend trading tools. We have signals in here for scalping the market as well, called art reversals. So we've got a lot of flexibility built into this program depending on how you want to use it. This is just another example on an S&P E-mini contract on applying risk control. And notice the only difference between this and the other one is that we're solving for contract size, not share size. But the same principle relies, and what we do is we adjust the calculator and put the point value, which is down here in the calculator, to $50 because that's the value or size of 1 point in the S&P. So that's how you calibrate the calculator to different futures markets. All right, notice the raw risk here is 575. Okay, so the calculator says you can go long a maximum of 3 contracts, and if you got stopped out, it would be 872. So now then, I got one question for you guys. What would happen if your entry and your exit were further apart than $5.75? What would happen to your trade size? Would it go up or down? Up or down? If it's further apart. Excellent. You got it. You understand it. All right. So if the entry and the exit are further apart and our percent risk is going to stay the same, then the trade size has to be smaller to keep the risk at the same amount. Vice versa. Okay. If the risk was a smaller amount, your trade size could go up. Okay. Good. All right. Now here's an example of using the trade size calculator on a trend where we had multiple entries. You probably are familiar with the term doubling down. All right, you don't want to do that. That's something investors do to get a better cost basis. It's not something traders do because it increases our risk on the short term. So what you want to do here is always, if you're about to enter again, the position's got to be profitable. Your cost level has got to be higher than your previous entry. And you need to use the trade size calculator for a second time to figure out your actual trade risk again, because you never want your percent trade risk to get any more than 2%. That's a safe way of adding into the trend. Okay? So that's kind of the deal behind that. All right, let's move on and go to the next one. All right, now we're getting close to the end here. We got the sweepstakes coming up next. Now, I want to put a link up here for everybody, because if you don't win the sweepstakes, we have a free trial on all these tools for you all. All right, it's no obligation. Okay, it is. We don't even ask you for a credit card. All right, I'm going to put the link up there. But the idea is you can download these tools. They will run for 10 days. At the end of the 10 days, you have a decision whether you can buy it or not. All right? If you don't want to buy it, you just uninstall them. But no harm done, okay? You're not going to get a phone call from us or anything else. We want you to enjoy your trial. You get plenty of instructions, all right? We have complete instructions and videos. So the idea is you're going to know how to use the trial, and you're going to know how to use each study because we have instructions. And also, too, if you have any questions, I have a weekly webinar that I hold each Wednesday that you're allowed to come to ask me questions. And those are called our client support webinar groups. Okay, so you definitely want to take a look at that. And I would suggest if any of this type of stuff interests you, whether it's the risk control or this, take advantage of it, okay? Because this is a great opportunity. All right, so what do you think? Are we ready for the sweepstakes? And again, it will work on Forex, futures, stocks, bonds, any time frame, etc. So, and it's a fully functional software for 10 days, okay? We don't hold anything back. Okay, so I'm getting some yeses. I guess that means we want us to do the the sweepstakes. Okay, so here we go. We have got a ton of entries here, which is great. So what I'm going to do is I'm randomly going to pick an entry, and I'm going to say the person's name. If you're there, you have to respond in the chat. If you don't respond, I'm going to assume, okay, that you've left, okay, and we'll go on to somebody else. So, okay, Steve, drum roll, please. Here we go. All right, hold on. Oh, that's perfect. I love it. Okay, hold on. We're almost ready. All right. Is Jess Hancock out there? Jess, are you there? Jess Hancock. Going once. Going twice. Steve, if you see him there, let me know. I don't see him. Wait. Okay, hold on. Sounds like a fake name.
Looked like Jess H.
Do we have him? Okay, we have him, I think, right? Steve, do you see him?
Yeah, let's see Jess H. from Virginia at 8:43.
Hey, Jess H., give me your zip code. Give me your zip code, then I'll know that's for you for sure. That's not you. Oh, wait a minute. Hold on. Yes, that is you. Okay, sorry. Yes, that is you. Sorry, I looked at somebody else. Okay, you're all set. Hey, Jess, congratulations. All right, you there? Put you through the ringer a little bit, didn't we? Okay, great. All right, well, listen, Jess, what we'll do is we will get you an email, okay, by tomorrow morning that has your software download links in them, okay, and you can go ahead and get started, okay? So congrats. Okay, good. All right, so let me just go back to the PowerPoint one more time. And as we wrap up here, I want to thank everybody for attending. And Steve, I want to thank you so much for having me. You got a great group. You got so many people here. I can't even begin to attack some of these questions. It would take me all night. So I think the best thing for folks to do here is take our trial, okay? Because if you take our trial, you're going to get so much documentation with this that it's really going to answer your questions. And of course, you can come to our Wednesday briefings, where our client support area. I'm going to put the link up again for the trial. All right, so go ahead and take a look at that. And you click on that link, and it should take you right into the trial area, okay, where you can fill out the form. And then what happens, please use a valid email address, okay? Please use a valid email address, because we actually email you the download links for the trial. So if you put a fake email address in there, you're not going to get it. All right? Okay, so cool. All right, so everybody see the link? I'll even put it up one more time. Okay, cool. All right, so there you have it. Okay, Ben, answer the questions. Gene, there's about 300 questions. Which one would you like me to answer? Okay, platforms. All right, platforms is a good question. The platforms that our software is available for, okay, is TradeStation. It is available for eSignal, MultiCharts, MetaTrader 4 and 5, and also the risk control software. We have the trade size calculator. We also have the Trader's Assistant. Trader's Assistant is pretty cool because it's a record keeper, but it also figures out the percent you should put into the calculator if you want to be exact, because it has Optimum F built into it and risk of ruin tables, etc. Draws your equity curve on closed trades. So if you actually want to have an accurate percentage, you put that in, and you can take a free trial of the Trader's Assistant too, okay? All right, the other thing too I'm seeing come in here is that each Wednesday, just to answer questions, I do hold a live client support webinar. It's an hour every Wednesday, and it's at 9:30 a.m. Pacific time. So if you're on the East Coast, that's 12:30. And you can come in there and you ask questions, and I'm basically going to be right there answering your questions with charts. We look at a lot of live markets. All right, so if you have a stock or a futures market you want me to look up, I can do that, and we can go over it together using the tools, software tools. So that's a big plus, and while you're on your trial, you are allowed to attend that. Once you purchase, of course, then you can attend all future events. Now, we have a ton of recordings on this, okay, as well, so you can view the recordings, and that will be in some of the emails you get back when you sign up for the trial. All right, so basically, once you sign up for the trial, we're going to give you all the materials and all the information for you to go ahead and get started, okay? All right, TC2000, no, it does not work in TC2000. Sorry about that, but it does work in most of the major platforms out there that I listed. And I'll be glad to list those again as well. Not Thinkorswim, sorry. Options House, nope. Now, if you don't have anything that you think is compatible, let me just throw something out at you. NinjaTrader, you can download NinjaTrader for free. That's a free platform. And that connects to a lot of different types of brokers and data providers. So if you have a broker that's on the NinjaTrader compatible list, okay, basically, you can download Ninja for free, run our software on Ninja, and it will connect to your data provider. But also, too, Ninja has free end-of-day data. Okay, so you can use that as well. So if you don't have a platform that's compatible, that's what I recommend, okay? NinjaTrader, get their free platform, get it going, and then you install our software right in there, okay? And we have complete instructions on how to do this. And by the way, Ninja also has very good instructions on how to connect to the various data providers and brokers out there. If you're using MetaTrader 4 and you're a Forex trader, okay, then you're all set. Our software installs right into MetaTrader 4. We have tons of Forex people using it. Our software is now used, I think, in over 58 countries worldwide. So we're out there, and a lot of people are using it on a lot of different types of platforms. So there is a solution for you, okay? It's just a matter of finding which one is best for you. Okay, so I think I'm going to put that link one more time up here, okay? And there you have it. And Steve, I think we're pretty much all set here. I'm trying to think, are there any questions? Gene, are there any questions that I need to answer here before we end? Sorry, it's only 10 days, not a month. And basically our statistics show if you don't know in 10 days whether you want something or not, the extra 20 is not going to make a difference. Okay, if you're with NinjaTrader and you have it already, all right, all you have to do is sign up for the trial, and we have instructions on what to do. The 10-day starts when you actually install the software, okay? All right, so I think any more questions that come in here, don't see, I think we're slowing down a little bit. Good deal, see you next time. Okay, good. All right, very good. I think we're in pretty good shape. If anything comes in, we'll answer on text chat. Okay, so yeah, if you sign up for the trial, it's when you install the software. So if you wanted to wait till Tuesday, that's fine.
Bennett, thank you very much. Once again, very good information.
Oh, you're very welcome, and I really appreciate being here, too.
All right, everybody, try the 10-day free trial. You're going to get some valuable information whether you want to or not, so take advantage of it.
Yeah, that's a good point. Actually, even if you don't buy the software, you still have a lot of good material you'll learn from. So it's a home run. You can't lose.
All right, Bennett, thank you.
Right.
Gene, thank you. Stay warm out there in sunny California. And once again, enjoyed it. Very good information.
Thank you, Steve. You take care, and thank you, everybody. Pleasure to be here. Bye-bye now.